Massive price reductions and record high inventory, that's what really defined the Houston real estate market in 2025. My name is Ashley Sesteda. I am your Houston real estate pro. I help buyers, sellers, investors, and relocators just like you every single day make moves and investments in and around Houston. If you got questions for me while watching this video, my number's up on the screen. Don't be shy, call me, text me, leave me a voicemail. All you have to say is, hey, I watched one of your YouTube videos, have a question for you. In this video, we're gonna break down the real, state of the state of what happened in the Houston housing market in 2025 and what we're expecting moving forward in 2026. And what all this means for you as a buyer or seller or someone who may be thinking about relocating into the Houston area. Did the Houston real estate market crash? Let me know what you think in the comments and let's get into it. But before we get into it, before we talk about anything else, back to that question, we have to address the headlines about the real estate market crashing. If you paid attention at all, even a little bit in 2025, you probably saw words like crash, collapse, housing market, downturn being thrown around everywhere, especially when it came to the Houston market. So let's clear up with some actual facts here. In 2025, the median home price did decline about 3.1%. And that number is important because 3.1% is an adjustment. It's not a crash. A crash looks like double digits. A crash looks like forced selling and halted development. And that is not what happened here. What we experienced instead was a natural market readjustment. And to understand why and where that comes from, we have to look back at what came before 2025. So from roughly 2020 to about 2022, especially during and post-COVID, the Houston housing market was extremely one-sided in favor of the sellers. And during that time, the interest rates were historically low and inventory was also very low and tight. So the buyer demand was very high, bidding wars became the norm, and people were actually settling on houses they didn't even want, houses that needed more work than they could handle because they got outbid on their last 5 offers they made. So they way overpaid for the homes. Homes were selling fast and way over asking price, and buyers were stretching themselves thin just to win a home. Because the interest rates were excessively low in the high 2 to 3% range, lower inventory, extremely low interest rates, and massive buyer demand caused home prices to rise very quickly over a very short period of time, especially at the peak of it in 2022. Sellers made out like bandits, and here's the simple truth. What comes up must come down. Anything that goes up fast usually needs a lot of time to level out, and that is absolutely true with the real estate market after record-breaking highs. So in 2025, prices didn't fall off a cliff. They didn't collapse. We did not have a crash. We have just started to level. That 3.1% dip in the Houston median home price was the market resetting expectations, adjusting to higher interest rates, responding to more inventory, and moving away from panic buying and I have to make an offer now, like what was before in 2021, 2022. This is what a natural and healthy correction actually looks like, not a failure of the market. And this readjustment just set the temperature for everything else we saw in 2025, especially when inventory really started to build. Once the prices started leveling out, the next big shift that we actually saw was in inventory. So traditionally, a buyer's market is considered 6 months or more of inventory. But what made 2025 feel so different is where we're coming from, which was that COVID and post-COVID years. Houston was sitting closer to 2 months of inventory or sometimes less in the more popular neighborhoods. And that's extreme. That's a market where buyers are competing and sellers have all the leverage. So when inventory started to rise into the 4 and 5 month range, it didn't just feel different, it felt dramatic, and it really was. And this is what turned the Houston housing market into more of a buyer's market. That gap, that readjustment is what really changed the market. Okay, so then summer 2025 hits, and this is the tipping point. Summer is already the busiest time of year in most markets, but especially in the Houston market, to list and sell your home. But in 2025, we saw the highest influx of homes hit the market in over 10 years. So now you have more homes that buyers are used to seeing, higher interest rates, plus affordability pressure from the economy as a whole. That combination shifted gears in who had the leverage very quickly. With record high inventory, buyers suddenly have all these options and their mindset changes. Instead of asking how fast do I need to get it together and make an offer and move, buyers started really asking, is this home worth it? Could we find something better? They became more selective, they slowed down, and they really started comparing homes and making decisions that were best for them. And this is the exact point we start to see homes sitting longer, price reductions becoming common, and sellers' concessions becoming very common, where we're seeing the sellers offering 5, 10, 15K to buyers at closing, which came in clutch for buyers in 2025. Being able to use that concession money to buy down their interest rates in order to get into the home, have help with some closing costs, but more importantly, reduce their interest rate points down to make their payments more affordable. So not only were they getting the home at a discount from the original list price, they were also walking away with money from the sellers. This reality caused so many listings to be pulled off the market entirely due to overpriced homes and a lot of frustrated sellers. So in 2025, it became very clear that there were really only two types of resale homes that were consistently selling, and we believe that this will actually remain true going into 2026. So the first kind of house that sells is the nicest house in the neighborhood. These homes are turnkey, they're move-in ready, meaning they're well maintained or updated. They have good layouts and they don't overwhelm the buyers with repairs. Second is the best priced house in the neighborhood. Not perfect, but clearly priced right from the start. Everything else on the market struggled. The average house at the average price just did not win anymore. Sellers couldn't get away with it. So since buyers get to be more pickier than they were used to in previous years, they were no longer competing, and now that means that sellers have to compete again. And this shift set the foundation for everything we're seeing and predicting as we start to move into 2026. So after the inventory, the next biggest driver for everything we saw in 2025, which is not going to surprise anyone right now if you've been paying attention at all, is the interest rates. This is going to make a huge impact in 2026. For most of 2023 and through 2025, interest rates stayed elevated. At times, we were seeing rates in the high 7% range, which had a massive impact on affordability. Even buyers who could technically qualify were asking themselves, does this monthly payment actually make sense for my life? And for a lot of people, the answer was absolutely not. So that's what really slowed the market. Now, as we enter 2026, we finally see rates start to inch downward closer to the low 6% range. That might not sound like a dramatic drop, but believe me, even a 1% shift can make all the difference in the world and improve one's monthly payment by even hundreds of dollars. And with that, that's what's going to start to just loosen up our market just a little bit as we come into 2026. So as interest rates start to ease a little bit, the first thing that we expect to see in 2026 is more buyers entering the market. Hear me clearly. We're not predicting a flood, no chaos like in 2020, 2021, but just a slow, steady increase. The first group that we're gonna see a lot of as far as buyers come in is gonna be those move-up buyers. These are people who already own a home, have growing families, need more space, want better layouts, or better schools, better communities. They may have had already good equity, but the higher rates made upgrading last year feel like too big of a jump. So as rates come down, that move starts to feel a little bit more doable again, and people are gonna start to dip their toes in the water and make their move. The second group is the first-time homebuyers. A lot of first-time homebuyers have been sitting on the sidelines last year because rent felt cheaper than their mortgage payment would have been, and that's because for most, it absolutely was. They couldn't buy a home even with a pre-approval because even if they got a great deal on the home, plus those seller concessions that we talked about, the rent they were paying was still astronomically cheaper and more affordable. Here's one of the biggest pieces of proof that the real estate market did not crash in 2026, and that is new construction. Master plan development did not stop. Our suburbs around Houston are booming and expanding, and that matters more than people realize. When a housing market is truly in trouble, when it's actually crashing, builders pull out, they pull back, they pause or completely stop releasing new projects or new phases. Builders don't build based on short-term emotion, they build based on long-term demand. And their actions have showed us some confidence, not fear. And one of the major points for their confidence is that Houston is one of the biggest relocation cities in the nation right now. Even with the economic pressure, higher cost of living, higher rates, people are still moving here because we've got the job opportunities, no state income tax, a strong diverse economy, and we relatively have more affordable housing compared to other major metros. And when people relocate, especially families, they're often drawn to master plan communities because newer homes, amenities like pools, trails, gyms, top-rated schools, a sense of community and predictability. And to that point, this is exactly why new construction continues to be a win, especially for first-time home buyers. move-up buyers, or families relocating into the Houston area. New home, new construction is also a great focus for anyone looking for affordability. One of the biggest shifts we saw in 2025 is that buyers stopped shopping based on the price of the home and started shopping based on their monthly payment. And builders adapted to that really, really fast, faster than the resale market. They were able to adapt because these large-scale master plan developments are building and selling in volume, not one at a time like a regular seller selling their home resale, which that gives these builders a lot of flexibility that the individual sellers just don't have. That flexibility shows incentives. In many cases, builders were offering incentives anywhere up to $20K, $30K. I heard someone got $60K towards the buyer. Money that could be used to help with closing costs to bring to the closing table, and again, money to buy down the interest rate points, lower the monthly payment. So for example, and this is just an example, a builder might have priced one of their homes at $400K, but then offered something like, let's say, $30K in credit to the buyer. That credit could be used to reduce the interest rate, which can dramatically lower one's monthly payment. When buyers run those numbers side by side, brand new home, builder incentives, often this makes more sense than going after a resale home in a more mature neighborhood. Now let's just talk about a few predictions and what we're expecting as we are into 2026 now, based on what we saw throughout 2025 and the data that we have. Let's talk about what this actually means for the buyers and sellers. Starting with my buyers, even though we expect more buyers to come back into the market in 2026, that does not mean that buyers' leverage is lost. In fact, we're still expecting that buyers are still going to have some very, very strong negotiating power well throughout 2026. In some cases, maybe even more leverage than they had in 2025. And here's why. The market has now had a full year to adjust. So in 2025, we were still working with some very unrealistic expectations. A lot of sellers were still pricing their home based on the peak years of 2021 and 2022. That caused homes to sit on the market for way too many days on the market, caused price reductions to pile up. In many cases, sellers simply had to just pull their homes off the market altogether. Now, heading into 2026, expectations are landing just a little bit differently. Sellers have had an opportunity, either by experience or by watching, seeing what's been going on with their neighbors trying to sell with their own failed past listings in 2025. They've seen homes move after multiple price reductions. So when sellers list this year, many are coming in with a more realistic start point. And that, my friends, is what's going to give buyers a better starting point and negotiating power to purchase homes, maybe slightly below a more reasonable list price, negotiating repairs, and receiving some sellers' concessions. Again, in 2025, we regularly saw sellers offering concessions. That money is just so helpful. It helps buyers reduce the amount of cash they need to bring to closing, and more importantly, help them buy down interest rate points to make their payments more affordable. So, with that being said, we're really just waiting to see. I think everyone is most excited, maybe hesitant about this, as to where the interest rates are actually going to land in 2026. We expect them to continue to trend downward, and we expect with more motivated sellers who have maybe unlisted their properties last year or have been watching and waiting to list their properties this year, that this is going to create a market, depending on where the interest rate goes, where deals get done without super high days on market through negotiation that's a win-win for buyers and sellers and no pressure. And that's exactly what a more steady and balanced market looks like. Now let's talk about sellers, because 2026 is going to hit just a little bit different, especially from the market we might remember from even just a few years ago. This is not the kind of market where you can simply put a home on the market, list it high, and just cross your fingers and hope that you get lucky. That approach worked in 2021. It does not work like that anymore. One of the biggest lessons we learned in 2025 is that overpricing does not protect your value. In fact, it kills the value and it kills your momentum for the sale of your property. We saw this over and over and over again. Homes would come on the market, priced just absolutely way too high. They would get little to no action, and then 30 days would go by. That usually led to an uncomfortable conversation between them and their agent. Even if the agent had been upfront from the very beginning about the pricing, sellers still wanted to just wait it out a little bit longer so they didn't leave any money on the table. And then more days would pass, 60 days, sometimes 90 days. We saw listings that had been listed for 100 days plus, and that became the norm. So by the time the seller was actually ready to adjust the price, the home had already been sitting on the market long enough to where buyers started asking, well, what's wrong with this house? and why hasn't it sold? Why doesn't anybody want it? At that point, the seller's already lost leverage. Pricing correctly from the start in 2026 is gonna be one of the most important things a seller can do. A home that is priced well and positioned correctly early on will always perform better than a home that starts high on wishful thinking and unrealistic expectations. But let me tell you that the pricing is not gonna be the only thing that matters. Presentation matters just as much. And presentation is not gonna be the same thing as the condition of your home. Your home does not have to be fully renovated or brand new, but it does need to be functioning properly, feel clean and cared for, and move-in ready, because that's what buyers in today's market are looking for. Buyers today are far less willing to take on unknown repairs that they were willing to take on just a few years ago. So if a buyer walks into a home and starts to mentally add up all the repairs, they are much more likely to just move on to the next house instead of negotiating. Let's go back to the presentation side. The basics matter more than ever. So presentation is really simple. A fresh coat of paint, professional cleaning, making sure that the floors and the grout shine, maybe updating some very outdated lights, fixtures, ceiling fans. Decluttering is always very important, and good lighting. All of these things go a very long way in helping a home feel inviting so that a buyer can picture themselves in there. Online presentation matters too, which is why you need a really strong agent that understands this responsibility and can take it on with high quality photography, videography, even virtual staging, or maybe even actual staging when appropriate. This can completely change how a new home is perceived before a buyer even schedules a tour and steps inside the home. Sellers, these are all the things that you can control. And this is something I'm very honest about as an agent. I will not take a listing unless we're aligned on pricing and what the home needs to look like as far as presentation goes. If we don't take pride in how the home shows and how it's positioned, the home will just sit, get passed up, buyers will move on to the next, and that's a letdown for everyone involved. In 2026, the sellers who win are the ones who are going to be strategic, realistic, and prepared. And that brings me into condition. Because remember, condition is not presentation, but it is a huge part of the conversation that we cannot ignore. Condition is the actual state of the home, and in today's market, buyers are paying close attention. Your home does not have to be fully renovated or modernized to sell. It does need to function in every way as intended. Buyers in 2026 are far less willing to take on major unknowns than they were in the past. If a buyer is looking at a home and immediately starts worrying about those big ticket items like HVAC, roof, foundation, that's when the deals really start to fall apart here. Even if those big ticket items are technically still working and there's no issues, buyers don't want to take on something that feels like they might be walking into a money pit right after closing, or even a year or 2 or 3 years later after closing. Here's where I want to be very honest and realistic. Not every home is a good fit for the traditional resale market. I work with a lot of sellers who feel completely overwhelmed with the thought of putting their house on the market for traditional buyers, because sometimes the repairs are more than they can handle financially. Sometimes a home needs so much major repairs it won't even qualify for traditional financing. For example, needing a new roof or some major foundation issues. And also sometimes life just happens and they need a quick, clean exit from their home, cash out. In those situations, selling off market to an investor can be very real and a very valid option. When you sell to an investor, if you're not sure how that works, you're not selling at a full retail value like you would on the traditional market. You're selling at a discount. But what you're getting in return is certainty that the investor isn't gonna back out. You have no obligations on repairs. And here's the other big pro. Even if you're selling at below market at a discount to the investor, all of the investors I know that I work with are buying your property, paying all of your closing costs, and even your realtor's fees. You get to sell the home as is, literally. You're able to walk away with cash and 99.9% of the time close much faster. As a real estate agent, I always encourage sellers to sell traditionally on the market to get the most value, to maximize their equity and appreciation that they've built, but only when it makes sense for them. Also know that that doesn't work for everybody, and that it's important that everybody has options. And if you're curious and you're wondering about any specifics about the condition of your home, and you're worried about any major or even minor upgrades or updates and repairs that you might need to perform before taking your home to the market, or if it's a good fit for the market, and talk you through your best options. Again, just send me a text or give me a call, and we can go through a unique situation, talk it through, and create a plan. Even though the market has adjusted and 2026 is shaping up to be a steadier year without a huge boom, One way or the other, Houston continues to grow. So whether you're a current Houstonian, you're thinking about maybe buying your first home or selling your home, maybe getting into a new community, a new construction, or if you're relocating into the area, I would love to be your tour guide and just trying to figure out where you fit. I would love to help. My number's on the screen. You can call me, you can text me. There's also some additional contact information in the description below. I really look forward to hearing from you so I can help you make your move into and around Houston in 2026.